It is another bloody day in the markets. Sell-off intensifies. We got a flash crash in crypto. Jim Cramer put a hex on the whole damn thing. We'll be talking about all of that and more today on Money Never Sleeps. Welcome back, everybody, to Money Never Sleeps. Before we get going, do us a favor, like today's stream, subscribe to the channel. Nothing that Kevin or I say is financial advice, so please do all of your own research before making any buys or sells. Kev, we got the Jim Cramer mush yesterday. He did it. He said it. He had positive things to say about Bitcoin. And what do you know? We see a flash crash down to 40.6K. It's rebounded now. It's in the mid 42s. But still a decent drop from Monday's high, of 45K. Actually, no, it was at 45K. Sorry, earlier today, like early in the morning. And now we are at 42. So a nice little pullback there. Thanks, Jimbo, for jinxing it. But don't worry, the ETF is coming. It will save us all.
Yeah, it seems like a lot of people are anticipating that this ETF is going to be flowing out in the next few days, right? SEC is in a very hit or miss spot right now. I'm not necessarily sure what they're going to be doing. I think it'd be best case scenario to rip the Band-Aid off and we just get the ETF approval. However, there are a lot of things, including Coinbase, including this flash crash, that are kind of lining up with the fact that we may not get it as soon as everyone is anticipating. There still is a lot of things going on in the crypto front that we need to see. But Jim Cramer, absolute kiss of death. The dude is arguably, I don't know, man, he's the biggest top and the biggest bottom signal I've ever seen in my life. But yeah, this was an absolute joke. We talked about the funding rates yesterday. Does not surprise me one bit that we saw that flash crash. I remember we said that this is extremely heavy long at this point. If it does pull back here, it'd probably go sub 40K. We got close. 40,600. But I don't necessarily think that this trend to the upside is done quite yet. We'll probably see a lot more volatility in the coming days. But just to get this out of the way, our liquidation levels on that move today, we can see that in 24 hours that Bitcoin has been liquidated $687 million. And the majority of that came within the 30 minutes that crash happened. So wild morning to start for crypto. But yeah, I mean, thanks, Jim. Absolute kiss of death on that one.
We also received some data today, as well as some talking points from the Fed. JOLTS report, nothing too interesting there. Came in right at expectation. I didn't really see a whole lot that would move the markets too much. We did also get, like I said, the Fed minutes. And as we've discussed previously, it seems like the market is once again out over its skis. In that minute from the December meeting, the Fed once again made it pretty clear that they're expecting rates to stay higher for longer. They don't see cutting until June potentially. And, 3 rate cuts this year seems like a likely outcome. Meanwhile, the market still has like 6 or 7 priced in. We've seen that start to shift a little bit. As you look at the Fed funds futures probabilities, we're seeing a little bit of an easing there toward, maybe they don't, they don't cut until, March, April, one of those meetings. But once again, the Fed is not trying to trick the markets here. It's laying out its case. It's just that people are getting overly exuberant with what they want to see happen versus what is most likely to happen.
You know what's really wild about this? I genuinely agree with the majority of the markets and the amount of rate cuts we probably will see. And that's just me thinking obviously different from how the market is thinking itself. I think they're hoping that the Fed is going to be extremely heavy on a lot of these cuts, maybe not for the same exact reasons. I think that there's just going to be something where very similar to COVID, where something happens and they're just like, oh, we got to bring rates down to zero. Too little, too late. It's not going to be that great of a move. I don't think the Fed's trying to trick anyone. I just think a lot of people also don't have a lot of faith in the Fed at this point or in the history of the Fed. I mean, we could look back at 2008. They cut rates too early. Next thing you know, we still got a recession. 2000, same thing. In the 80s, roughly late 80s, started cutting rates. Got 87 crash. But yeah, I think that we are going to get more cuts than maybe the Fed is anticipating. I think we're probably in the range of 5. That would be my guess this year. But I think that comes March. I don't necessarily think that it comes in January unless something horrible happens between now and then. But I do think that there is something that is spooking the Fed, and we can take a look at the reverse repo in a little bit. That shows you that we are in a bit of a liquidity crisis. I mean, is the DXY pumping here kind of a signal of that? Maybe, who knows? But I think that the markets have it right just for the wrong reasons.
All right. Yeah, that's they also talked about reverse repo. So why don't you go into that now, Kev? They
Yeah.
discussed reverse repo in the minutes, and I know that you said that there's been some changes there in the last 24 hours.
Yeah, man, it's absolutely wild when I look at the reverse repo. And again, this is the stuff that a lot of people find boring. I fucking love it because this is telling me where the money's going, what a lot of the major institutions are doing. And this kind of lines up with the 1 month treasury bill. Obviously people dumping that, looking for liquidity. But this is the daily reverse repo. And if we want to look at this, back to this is November 22nd or January 2023. You can see that as a 2.5 trillion. It is currently sitting at 704.86 billion. And it's not the lowest it's been since it reached that peak. Obviously, that was a few days back. It looks like December 15th or so, it reached about 682 billion. But the move that we saw yesterday and the counterparties that took the overnight repo, we can see that it moved from, I guess this is from the weekly, but it's down about 30%. 30.79%. The counterparties back then took 1.018 trillion. Now we're sitting at 704.864 billion. So I think the Fed is anticipating this to drain. I think we all are. Does this mean that necessarily we're in a liquidity crisis? Yes and no. It means that there is a demand for cash right now. And if we look at what happened to, recently, we just crossed $34 trillion worth of US debt. I think a lot of people are anticipating that is bullish for the stock market because the dollar is dead. Let's go back to what debt is. That is something that needs to be paid back. How do you pay back debt? Either you issue more debt, which is kind of hard to do right now with how rates are. A lot of the banks aren't necessarily doing it. And the other hand is you need cash to pay off that debt, and that destroys money out of the system, which also brings down the M2 supply. So it's a really tricky situation here. But as we see this continue to, decrease, and eventually it's going to probably hit zero at some point, I would say in mid to late February, even early March, I think there's a good argument to say that, there is a bit of a liquidity crunch here and people need money. The problems in China aren't necessarily getting fixed. The amount of money that they continue to pump in, the amount of work that they have to do in order to keep the economy just kind of sustainable, given its deflationary, I guess, trend that it's been on for the past few, 6-7 months or so. I wouldn't be surprised if this is, again, maybe a risk that is posing U.S. banks, the U.S. government, other financial economies, that once this absolutely drains out, we're going to be scrambling for cash because we need to pay off a lot of those debts. And the only bad thing is if we have an overweight equity market, guess where a lot of that money is going to come from, or where a lot of money is going to be, found. It's going to be found by selling a lot of these stocks. And that just creates a perfect storm for a lot of margin calls and a lot of things that are going to go wrong in the economy. And again, I think that we are sitting on something where all these, economies, whether it's Germany, Eurozone, Japan, China, United States, I think there's a very good chance that we start seeing those dominoes fall kind of in succession, but not necessarily with a long period of time in between. I think all those do start to go at the same time, kind of synchronized. But yeah, I think just the amount that it's shot down 30%, and again, maybe went up in the end of the year because they didn't necessarily need to worry about it in 2023, but now it's 2024. Gonna have to watch this over the weekly to see how this progresses, because if this starts to go down continuously into February, March, we know that the bank term funding program ends, and that's already, just looking at it right here, it ends on this red line and we continue going up. Where is this money going to come from? You have to ask yourself that question.
Yes, you do. All right, what else? I know that you had some stuff about Coinbase you wanted to discuss. We can keep this one pretty brief because there isn't too much else going on that that needs to take up a ton of time.
Yeah, absolutely. We take a look at Coinbase. I do want to look at Bolero too. Interesting. If Bolero, it's a bowling company. Lanes and stuff like that. Just the interesting short position that a lot of people have on it right now, and it could be a kind of a GameStop situation. So we'll take a look at that. But let's look at Coinbase right now. It went all the way down to 145 this morning. I think even lower than that, 144.11. So it's dropped a significant amount. It's down roughly 12% on the week. Yesterday Bitcoin was up. That's the interesting thing, right? A lot of people were wondering why is Bitcoin up but Coinbase down, and a lot of people were saying, "Oh, maybe it's just it was overweight and people were trying to sell off." At the beginning of the year, maybe the rest of the tech market kind of brought it down. I have some reservations, and someone brought up a great point on Twitter, and it's something that I've been following for a period of time. I talked about how potentially there was a letter sent out requesting that Kraken and Coinbase both remove USDT trading pairs from the exchange and also USDT in general from the exchange. And it was never done. They disregarded it. It's supposed to take effect with, I believe, in this year. So we wouldn't have had USDT in 2024 on Coinbase or Kraken. Oh, and then obviously we know that's a few days later, the SEC slapped a lawsuit on Kraken. So that's very interesting timing that happened in November. Now, a lot of people, and this is just rumors that I'm hearing, is that there's a good chance that Brian Armstrong could be stepping down as CEO of Coinbase. And that kind of lines up with a lot of things that are going on with this ETF. And again, I think this ETF is more important than Brian Armstrong. And it's because the people that are at play with this are more likely to make a lot more money and benefit a lot more people who are connected with some of these institutions that are going to make a lot of money. It's not me being conspiratorial at all. It's just me saying that, hey, Coinbase is important, but it ain't that important. So seeing this, I think that there could be a chance that he does step down at some point if we want to see a lot of Coinbase become one of the exchanges in the future. The thing is, for an exchange that's been so regulated and gone by the book to get everything done, they've seen a lot of trouble. And I think that might be because he's maybe a bit of an outsider and seeing a lot of the selling that we saw yesterday, which made no sense because Bitcoin had dumped this morning, not yesterday during the trading day. Maybe people know something. All right. I'm not saying that he's going to step down soon, but I'm thinking that all the stuff that's happened with CZ, all these exchanges, I don't think we're out of the woods yet. I think that there was a lot of people that they don't want in charge come this ETF approval. He is one of the people I'd be surprised is still around when the ETF is approved. So we'll see. I don't necessarily think I have the most confidence in him being around for a long period of time. That could just be my opinion, but also looking at the stock here, if we continue to go down on this trend, or you can see on the weekly where we start putting in more red weeks, I think we're going to fill out this wave 5, and that could take us to new lows. I don't think we're going to double bottom here at $26. I think we're going to be going a lot lower than that. And again, I'm not telling you to short Coinbase whatsoever. I don't believe in shorting anything right now because I think this is the time to stack cash and do less, to be honest with you, because right now I think there's a lot of people who are going to be chasing gains, and it's kind of a dangerous game right now. This thing could drop from oversold and when we least expect it, or it could, do another pump. I think TradFi is possible that we could see another pump in the markets. But for Coinbase, that's what I'm seeing. That's kind of the idea that I'm having with what's going on there. So just an idea to keep in mind. And again, CZ's, I think his hearing is in February. So there is going to be a lot of moves in the crypto market, both in the US and outside of the US until then. Now let's look at Bolero. This is a really interesting one because while everything was pretty much down yesterday, this thing shot up. It shot up a pretty good amount. It was up, 3.32%. I mean, obviously it's down
ticker
today.
Is Bull. I mean, that's just the best, right? Like that's awesome. I might go buy some more Bolero. I might go buy some Bolero just for the hell of it.
Yeah, I mean, again, I'm not gonna say that this thing is gonna short squeeze like GameStop, but think about a bowling company right now, and we do know that mania top for GameStop is just absolutely insane, right? In 2020, 2021, I think their short interest at some points was between 79 and 90%. People just going max short on this. And we do know that the VIX is at a very critical level where things could absolutely just shift in opposite ways, and we don't really expect the markets to react normally here, especially if there is a bit of a sell-off. But I think Bolero's current short interest right now is about 84%, meaning 84% of people are shorting it and insiders are buying the stock itself. I'm not saying that there is going to be a short squeeze. I'm just saying this is kind of set up very similar to how we looked at the funding rates yesterday. People were going max long. What happened? Dumped like crazy, right? People are going max short here. There's a good chance that we could see Bolero pump a little bit here. I'm not touching this just because, like I said, I'm doing less. Cash is more important to me than anything. But, I wouldn't be surprised if we go, north of this high that we got back in March of 2023, which is around 1752. I mean, if we get a little bit of push up, maybe $20 or so, it would have to be a mania top 100%. But, yeah, maybe there's a bit of a short squeeze there. I think there's just a lot of people that are very confident in their positions. I don't think you should be confident in any position right now. But yeah, I think that this has enough juice behind it that there could be a potential squeeze in that in the stock, given what we are seeing compared to GameStop and also funding rates that we saw across crypto. Now, anything else that we want to get into specifically, or can I just jump into some of the dollar and stuff like that?
Let's jump into the dollar. Let's hit Bitcoin. Kind of go wherever else you think we need to go. I will say,
Absolutely.
I just want to double tap on the whole do less thing. And it's a tough time out there if you're a full-time crypto content creator, because you got to do something. You got to put content out there. And when I see people talking about giving advice on how to trade a market crash, I'm like, oh, you're just like desperate for any conversation. Here's how you trade a market crash. You fucking don't. You
Exactly.
just sit and wait. Like, these people trying to get in and out of positions during extreme volatility. Like, what are we doing here? This is the time to, like, the more people are trying to catch the falling knife or get ahead of stuff, like, people are going to lose a lot of money by trying to do too many fucking things. Like, just take a beat, man. Like, you don't need to be in and out of the market constantly. I don't know. Maybe that's just my old boomer take, but that's the stance I'm going with right now, and I have a good feeling that by the end of the year I'm going to be happy I did.
No, I completely agree, man. And let me just give someone, a bit of a anecdote. I used to use exchanges that a month later they froze all the customers' funds. Had a position on Binance where a month later, if I had continued to hold it, I would have been liquidated 100%. This is a very dangerous time in this market, and you have to kind of acknowledge that there is risk regardless of whatever your position is, right? You go long, it's going to go down. If you go short on the market, there's a good chance that you're not going to be able to, claim your earnings from that move to the downside. We have to understand this is not a regulated market, especially in crypto, right? I mean, you could be right and still lose everything. That's a terrible thing, and that's not even worth it at that point, because you could just buy the dip if you have enough capital on hand. So I think that there is definitely a huge amount of risk in the markets right now, and that's why doing less is probably the thing that's going to save your ass more than anything. And that's not financial advice. That's just, save your sanity, because this is going to get really bad, in my opinion. And we saw those stupid funding rates and how much everyone's excited about this ETF. And on top of it all, Jim Cramer just saying that he's bullish on Bitcoin. Guys, it's over. It's so over at this point.
Over.
But death fucking I have to do a kiss of death Jim Cramer bumper now. Got to create
There
one of
you go.
those.
I like that. Okay, good
But
stuff.
DXY up 1.12%. It was up a lot higher today. Pulled back a little bit as the market was buying some of the dip. Obviously, that dip has been pulled back too. So here's the thing: they're going to keep buying the dip until it doesn't work anymore. And it looks like we're seeing a bit of that now. Could we see a bit of a squeeze in the equities? Yes, I think there is a good chance we could see that next week going prior to earnings, because I think earnings are going to send a lot of things in the direction that we kind of anticipate going in this year. But this is a pretty good move up for the dollar. We went all the way up to 102.075. Given that, last week of December, we were all the way down at 100.624. So we are looking at potentially seeing 103 in not too distant future. Obviously, it's pulling back a little bit here today. And that also lines up with what we're seeing in gold. I was talking about how gold has a good move to the downside coming soon. And it's bouncing back a little bit here, but we got rejected off this 2083 level. 2086, I think, is the height it went to. But this morning, it went all the way down to 2031. And yesterday's show, obviously, we were talking about it was around 2060. So that's a pretty good move to the downside that we saw for gold. And as it's going up, obviously, the dollar is losing some strength against it. But I continue to think that as things sell off here, the dollar is kind of in a great position moving forward. Obviously, we're going to be overbought today on the stochastic RSI. Put in a higher low at this point and continue pushing up. Maybe we're looking at 5 waves to the upside here. 5 up here in the smaller time frame, 3 down, 5 up, 3 down, 5 up. And that could take us, double tap at 107 or even a little bit higher. And again, I'm being conservative at this point because I don't want to get too ahead of myself at this point in the year. But I do think that if we do see some type of financial crisis, anything going on, recession, the dollar is going to just naturally go up as equities sell off. We're seeing that in the past 2 days here, right? Across that, we need to take a look at the VIX, because I told you before the show, we were, the VIX is around 13, 14 recently. It was down at 11 for a period of time, but we're living with a 13, 14 VIX in a 65 VIX world, right? There's so much perceived volatility that is coming, and so many things that could possibly go wrong in the markets in the world right now, that this insurance is extremely cheap. I still believe that at 14, 13, the VIX is, we're sitting on something that potentially could be shooting up to even like 25, 30 out of nowhere. I mean, I think the longer we stay here, the greater this push to the upside is going to be for the VIX. And when whatever it is that happens, have to keep an eye on. And again, I have March 15th this week here because that's the week that the BTFP ends. So obviously that could be cause for concern if any banks have any problems that week. So we'll just take a look at that. But yeah, consolidating here, maybe you have a push to the downside here. I don't know if people are taking advantage of this VIX here, or if they're just continuing to short it because, it's easy money to short the VIX until it isn't. Something goes wrong. But I think that we are still seeing, we're going to see a pretty good push up for the VIX this year and potentially even in Q1. I think Q1, we are pretty much due for at least something north of 30. I'll say that. I'll make that conviction bet that we should see a VIX push above 30 by end of Q1. Watch me be wrong by like 3 days or something like that. It happens. I'm always early, guys. It seems to be that way, but regardless, I think that
go all the way down to 1. We're gonna have a VIX of 1. The euphoria will be unbelievable. Can't wait.
This is the trade I'm in for the VIX. I'll just show you guys. I show you often, obviously. It's the SVIXy, and this is pretty much easy money. Shorting the VIX pretty much goes up only forever, right? Till it doesn't, and that's because if we look up here, Volmageddon, this shot all the way down. So $281 down to roughly 54, but the height of it was all the way up at 558. Kind of looks like the Turb chart, but when these things don't work out and the VIX does shoot up like that, and again, we haven't seen any type of recession crash like we saw back in 2008, where the VIX absolutely tumbles like this. We've yet to see a financial crisis in the VIX with the SVIXy that gives us the idea of what could happen. But when we see something like that and the VIX starts blowing up and all these people have to get out of their trades and they have to start selling it off, that just means that the value of this ETF is going to drop significantly. And I think that's possible for a lot of these products that short the VIX. Very similar to what happened with the UVIX. People were buying into the SVIXy and the SVIX, and the UVIX and anything bullish for the VIX was just absolutely shit for weeks, for 2 months there. So it's really interesting to see this, but I think that people are going to be chasing money back and forth, and they're going to be screwed out of positions because they're just too over leveraged. Margin continues to be a major issue in this market. I don't care what anyone says, but yeah, I mean, speaking of margin, Bitcoin on the daily, right, dropped roughly. I mean, earlier this morning, I was watching it, and I saw it actually kind of happen live. So we were all the way down here. It was down about 10% or so. It hit all the way to about 40,600 or something like that. Yeah, 40,750 it says here on Binance. I don't necessarily know what the Coinbase price was, but it's a good move to the downside, right? And think about how much we talked about in terms of liquidation: $686 million worth of liquidations, 594 million of that 686 was all long liquidations, and then 92 million were short liquidations. So as soon as people started shorting, the price went up, bounced 5%, and that just tells you that people are going to be chasing these gains nonstop. And think about all the people that are probably had 3 to 5x, even more than that, got wiped out instantly. There's no chance for a lot of these altcoins. I mean, Bitcoin, I still think that there is a push to the upside here, especially if there is rumors around this ETF. I think we need verification whether we're going to get it or we're not going to get it for Bitcoin to make its true decision and where it wants to go in this market, or something horrible happens. Otherwise, I think we're just kind of be in this limbo of back and forth, despite whatever Jim Cramer says. But if we look at ETH had a really good move to the downside here today. You can see that we went all the way down to 2101. I mean, just from the wick to the bottom, that's about 12% move to the downside there. Matic absolutely bleeding recently. Look at that. I mean, it was down significantly today. I mean, from the top of that down here, where it went to 71 cents, that was a 27% move down for Matic. If you were able to catch that bottom and you longed it a little bit there, it's a pretty good trade. But these alts are definitely, everyone's saying it's alt season. I don't know if this doesn't look like alt season to me one bit. AVAX, really good move down today as well. It went all the way down to, $32. To 20% move down. Bounce obviously is at 36 now. Solana had a really good move down as well. I mean, everything had a great move down. It was a flash crash. Everything was extremely long, 24% there for Solana. Definitely some FTX people took profit there. But it seems like a lot of what happens most definitely is pretty much people were too long on the wrong side of the trade. Now, I think that we're going to continue to see this until we do get that verification that we have an ETF or we don't, right? So across the board, looking at crypto, I think that we continue to see alts maybe get some of this volatility. Bitcoin remains in this 40 level. ETH kind of stays in this level. Maybe ETH, I still think ETH has a pretty good move to the upside. I would say maybe, I mean, it looks like this 24.5 is a good level. Maybe the top of this parallel channel, but we have to see how the stochastic RSIs respond. For the most part, though, I think that we are seeing a lot of danger in the crypto market. And if we continue to see this, it's only a matter of time before we start seeing some 20-30% days down for a lot of these altcoins. I just don't think altcoins are the place to be right now in crypto. Sure, you can make a lot of money, but you can certainly lose a lot of money as well.
I think if you're going to be in altcoins right now, it is with a long-term, medium to long-term time horizon. Like, I don't think you want to be, overweight altcoins, but I'm not opposed to the idea of continuing to slowly DCA some of these to build your positions for whenever the next bull market happens. But trying to have a huge position in it and trade the shit out of it does not seem like the best play right now. Like, this is find what you believe in over the next 5 to 10 years, accumulate those, but don't stress too much about the day-to-day fluctuations.
Yeah, I mean, I think you got to ask yourself too, which ones are going to survive if we do see something horrible happen, right? Across the entire financial market. Obviously, regulation's coming. Do all of them survive regulation? Who knows, right? I think I can tell you one thing that's going to survive regulation regardless. It's going to be the US dollar. I mean, I hate to be an asshole who's just bullish on the dollar, but guys, $34 trillion worth of national debt, and debt needs to be repaid back, whether it's through new debt or it's just, cash. So I think that's when you look at some of these altcoins and people are extremely heavy here, it's like, okay, if you're willing to hold some of these, just remember 60-80%. There's a good chance that those can continue to go down from here. So just something to keep in mind. I still think that we need lower lows for everything. But I'm not too concerned. I'm not getting caught up in waiting for that to happen instantly. I think the market's going to do naturally what the market's going to do. And the deeper we go into earnings season and closer to the March, and then we start seeing a lot of volatility start to happen in markets, we could potentially see a lot of things definitely change. Unemployment, we need to see that as well, because that's going to be a huge factor for pushing those prices down even too.
All right. That is how we're going to wrap it up for today's show. Appreciate you for joining us. If you have not yet, hit that like button, subscribe to the channel, drop a comment, share us out on social media. All of those good things are greatly, greatly appreciated. We'll be back tomorrow, same time, same place. In the interim, stay safe out there. Make sure you're not, do less. This is the year of doing less. So just do less, and we will see you next time.
Take care, everyone.